Before we get started, a quick disclaimer. The information shared on the Grow Givers Project is for educational and informational purposes only. Nothing discussed in this episode should be considered legal, tax and accounting, or financial advice, nor does it create attorney-client, accountant-client, or an advisory relationship. Every situation is different, and you should consult a qualified professional who understands your specific circumstances before making decisions. Our goal here is to help entrepreneurs think more clearly, ask better questions, and build stronger businesses, not to replace professional counsel. Thank you. And now to the episode. All right. So definitely excited to have you here, Valaise. I have been looking forward to this conversation for quite some time. I've observed and watched your ascension and progress over the last several years. And this is a topic that is not near and dear to my heart, but is necessary. I think most entrepreneurs feel the exact same way, right? And we talk about tax and accounting and how important it is that entrepreneurs and small business owners at least have a working framework and an understanding of the value prop that individuals with your skilled trade, how you perform and how you can help them become more profitable and scale and build healthy businesses and create legacy and financial independence and everything in between. So briefly, if you don't mind, share with our audience, your background. Why are you excited about the work that you do? What was your journey into the tax and accounting industry?
Yeah, well, Juwan, thank you so much for having me on the Givers Grow podcast. I'm looking forward to getting into this conversation because this is something that is very near and dear to my heart. I am the founder and CEO of Tried and True Financial Services, known as the Financial Clarity Architect. But in this space, I am a licensed enrolled agent, and I've been doing taxes for over 25 years. And so this was something I have an undergraduate degree in finance. It's just something that I'm very passionate about, right? And so I was working for a financial services company that ended up going out of business. And at that time, I was serving as their chief compliance officer and back office administration, handling their portfolio reconciliations for their book of business in excess of $1 billion. But that firm ended up getting caught up on a policy and procedure technicality and ended up having to close its doors. And at that time, I couldn't see myself going out, brushing up my resume to look for another job. So I didn't. I married the income tax preparation experience that I had, just that I had learned personally for myself, just because I'm a sponge and I love all things finance. But I married that income tax preparation background that I had with the reconciliation background that I had working for this financial services industry. And I launched my business in 2015, Tried and True Financial Services, to serve the small business community because I grew up in a day and time where I was taught to go to school, get good grades, and get a good job, right?
Mm.
And so entrepreneurship wasn't taught. I had to learn it on my own. But at that time and during that season of my life, I felt like I could better serve the community that I was raised in that may not necessarily have the strength and the skill set in this space. I always tell people I have a gift and a talent in a space that many people would rather avoid. Like you said earlier, people don't want to talk about taxes. They don't want to file their taxes. They don't want to pay their taxes. These things they just don't want to deal with, but it's something that comes easy to me. So that's why I created the framework, the ABCs of finance, to try to simplify this process for entrepreneurs in the ecosystem, like I said, that came up in the same community that I did.
So I want to touch on this because it took a hell from the financial service industry myself. We tend to be a very conservative bunch of individuals, right? And that whole mantra that you just shared, go to school, make good grades, go out and get a good job. That's like steep deep in it, right? Most people who go into the financial service industry, they're not thinking about entrepreneurship. They're trying to climb the corporate ladder. The certificates and degrees and all the alphabets start coming. And you become very attached to this ideal that I am a highly compensated financial service professional. And this is just my jam. This is what I do. So I know that transition couldn't have been easy. Like, what gave you the courage or the wherewithal to say, you know what, I'm gonna step out here on faith and I'm gonna launch a business. I'm gonna start generating revenues, taking on clients. What did that transition look like for you?
Well, to be perfectly honest with you, Juwan, in 2014, it was a pivotal moment for me because it was my first time traveling, taking a trip, a solo trip. I
Mm,
always wanted to go to the Essence Festival, and the Essence Festival was being held in New Orleans in 2014. And while I was at the Essence Festival in New Orleans, they had all of these breakout sessions, and I ended up going to a session that was moderated by Steve Harvey and Lisa Nichols. And
hmm
at the time, they had this program that they were rolling out. It was an online course. Before online courses were even popular, they had this online course. And in this session, Steve Harvey was talking about his journey to success and some of the things that he experienced on the low end of it. And his whole message was is that when you make up in your mind, or if you have something in your mind that you're thinking about that you want to do, you can't overthink it. You just got to do it. You just got to jump out there. And it was this whole thing. They had these stickers with jump on it, and then they were rolling out this online course program. And I knew at the time, the company that I was working for that ended up going out of business, we were in a SEC audit.
mm,
However, we were prayerful that we would come out on the other side of it, but at the same time, I was still thinking about, well, dang, what's next for me, right? And so I took that opportunity to jump at that conference at the Essence Festival in 2014, and I signed up for their online course program, and that was when I got my big toe wet into the thought of entrepreneurship, and that's what got me started on my way.
So I know once you dipped your toe in the water, money rained from the sky like manna. Like you
Oh,
became
of
a
course.
multimillionaire overnight.
Oh, so you want to talk about that and what happened after that,
What?
right?
Yeah. What did that look like?
Uh, well, a lot of times when you make these big, audacious, steps and goals, it's always that little monster of fear sitting on your shoulder, telling you, you can't do this, you're not going to be successful. Even though I'm a finance girl and I had already mapped it out. It was in January when I started my business, so it was tax season. So I had already mapped out my finances on how much money I needed to make that tax season. I had already been doing taxes kind of like just on the side for family and friends, word of mouth, things like that. Not really serious thinking of it as a business, but I had mapped out how much money I needed to make in that first quarter. I also was a notary at the time, so I was doing some notary signing agent work. I knew my unemployment was going to be coming in, so I had all figured it all out about how I was going to make it through that first year. And then a friend approached me and she was like, "Hey, I know what's going on with your company. I know you have a compliance background. I know about this opportunity over here at this healthcare company. I know you haven't traditionally done healthcare, but the compliance work that you do is transferable. You should check it out." So, of course, in my mind, I'm like, man, maybe this is my opportunity to keep that steady money, that steady paycheck coming in, hitting my bank account. So I'll go and I'll check it out. So I went and I interviewed for the position, and guess what? They
Mm,
offered me. They offered me a position, and guess what? I accepted it. So for the
hmm
first 7 years of my business, I operated as what I call a corporatepreneur.
I
So,
got it.
yep, and I stayed there way longer than I ever intended to. I stayed 7 years. So that started in like I launched my business in January of 2015. In February of 2015, I did this position. And it wasn't until the COVID-19 pandemic happened in 2020. So I was already working from home. It was like a hybrid position. I was working from home. And they told us, once we would go in the office maybe once a week or whatever. So they told us to stay on home. But in 2021, towards the end of 21, they were talking about how we needed to go back into the office, and they had this mandate that even though they didn't have a date for us to return to the office, they were requiring everybody to take the shot. The what you call that thing?
The
The
shot,
vaccine.
that's accurate.
The
That's what everybody
vaccine.
was calling it.
The
Yes.
vaccine,
Yeah.
exactly. And I'm a breast cancer survivor. I had just beat breast cancer in 2019.
Mm.
I had
Wow.
just finished 20 rounds of radiation in September of 2019. So for me, it was like I did my homework, I did my research, I had surgery, I did the radiation. They didn't recommend chemotherapy, but they wanted me to take this pill that had all of these side effects, and I said no to the pill because I just felt like with my faith in God, and I changed my lifestyle, changed my diet, I started exercising, all the things. I was like, I didn't take that pill that they wanted to give me, and I don't want the vaccine. That's just me. To each his own. Everybody had a choice to make. Whatever choice you had to make, it was a faith walk. You had to have faith to take the vaccine or faith to not take it. But my
Hmm.
decision was not. And so this company was mandating that we take it. And so I was like, that's my second sign. That is my time. So I jumped again. And I walked away from my corporate job, and I've been doing my business full time ever since then.
Okay. I love it. I did not know that.
Yeah.
I knew for a moment we weren't in contact
You know?
for a period of time. I didn't know why. Wow. Okay. So
Yes. Life be lifing, right?
life be life. I like your stories. Oftentimes entrepreneurs are fed this gibberish that, if you don't burn the bridges, jump 2 feet forward, burn, literally put yourself in a situation where you're flight or flight, you're not doing it right. And, I did the same thing you did to an extent, and I started my entrepreneur journey. I did something I would not recommend people to do, right?
Yeah.
I walked away from a quote unquote good paying bank job
Yeah.
with a consistent check. And I didn't quite burn the bridges, but I might as well have. I was like, I'm not going back to a W-2 situation. And no savings, single parent, right? Burning the candles in the residence because the electricity was off. I decided to do entrepreneurship. But I love the approach you took in the sense that if I'm hearing you correctly, you were working the job, but in the meantime, you were planting those seeds. You were developing those relationships. You were serving people on the side. You were doing work, building up that net worth, if you will. So when you made the transition, it wasn't foreign to you, right? The ideal of leaning in, taking on clients, the ideal of being able to communicate your value prop, and you gave yourself time to make that transition into full-time entrepreneurship. I love that example. More people need to hear it. So,
Absolutely. One other thing I want to say, Jawan, that's very critical to the entrepreneurial journey, right?
mm-hmm,
Is because I'm a finance girl, right? I get the concept of is you can't spend, whether you're in corporate or you're an entrepreneur, you cannot spend every dollar that you earn. You
mm-hmm,
always have to put something aside for what we call a rainy day or a sunshiny day or just another day, whatever you want to call it what it is, but you can't spend every dollar that you make. And so I was always good with my finances, and I had high paying corporate jobs. So I had savings to kind of help sustain me. At the time, I didn't jump out there and replace my corporate income
mm-hmm.
overnight. Like it didn't happen. It's still been a labor of love. And we know that entrepreneur journey is not for the faint at heart.
Not at all.
So
You just touched on something else, and I think you'll be in agreement with it. I mean, I generally tell entrepreneurs, if you can, stay on the job, right? If there's $1.50 on the table and you have a choice, you take both, right? You
absolutely.
work that job, build the entrepreneur endeavor on the side. You want to make sure, quite frankly, that you're not earning or replacing 100% of what you earn on a job. You really need to be replacing 130%.
Yeah.
Yeah, because we all get our turn at the BS.com. And you can have a $30,000 day or month and feel like the wind is, carrying you and there's no way you can fail. And then 2 months later, you earn $1 in 1 month, So yeah, I love your journey and how you couched it and framed it. So I'll kind of I'll pivot a little bit and go back to something we kind of started with, right? Oftentimes entrepreneurs I firmly believe they don't want to deal with CPAs. They don't want to deal with the boogeyman, right? Taxes. And some of it is fear and anxiety, right? But I also firmly believe that many people don't take on the advice and guidance of a professional and entrepreneur like yourself because they don't understand the value prop. Like they don't
Yeah.
understand how your work actually will make their businesses more profitable, more viable. It will open up doors and opportunities. They don't know what they're missing out on,
Absolutely.
right? They're
Yeah.
just thinking about the loss. I got to give up 25, 30, depending on your revenues, on how you structure 40% every dollar I'm bringing in. This is going to hurt. So let me put it off as long as I can. If you
Yeah.
don't mind, for the entrepreneurs who just don't know any better, what would be your response to that, right? Why should a entrepreneur right from the get-go surround themselves with individuals like yourself and start receiving that guidance right away?
Yeah, I couldn't have said it better, and I'm so grateful that somebody gets it, right? There's somebody out there in the ethos that really gets it. But the reality of it is that you end up paying more in the end if you don't pay it when it's due, right? And penalties and interest and all of the things. You would be, maybe you wouldn't be surprised, but I'm oftentimes surprised at how many people actually start a business and don't realize that they have to pay quarterly estimated taxes, right?
Mm-hmm.
And they don't understand or even know that if you do not pay your quarterly estimated taxes on time, there's a due date for each quarterly payment, that penalties and interest is racking up on that unpaid balance when you owe at the end of the year. So oftentimes the fee that you would have paid me, you could have saved, and you could have used that, you took that money from penalties and interest and paid a professional that's also going to position you to make sure that you have your financials in order so that you can leverage using other people's money, so that you can get certifications that's going to fast track your business, so that you can make those strategic financial decisions, so that you can get away from operating reactively and operating proactively. I hear so many people saying, yeah, I see it say on paper that I made this amount of money, but I don't know where it went. Well, you don't
Mm-hmm.
know where it went because you're not tracking it. And even though you're not tracking it, not only are you not tracking it, but you're not partnering with somebody and bringing someone into your business who complements your weaknesses. So if there's an area in your business where you're weak at, we know that you have to bring somebody on that exhibits that strength. And there's
Yes.
a reason for it because we're going to see things that you wouldn't nor ordinarily see. A lot of times you're missing out on tax deductions that you could have taken, but now it's too late because the end of the year has expired. And even if you decide in November or December to do it, then it's a scramble. It's a rat race to trying to figure it out. And it's a lot, oftentimes it's too late. And definitely when the new year starts or when it's time to file your taxes, it's too late to take advantage of the very things that is available to you in the tax code that you can take advantage of. Tax avoidance. Tax avoidance is legal. Tax evasion is illegal. So you can't wait until after the fact and say, oh, well, I'm going to try to massage these numbers to make it work out in my favor. But you can
Mm-hmm.
put some strategic plays in place in advance to make sure that you minimize your tax burden. And that's why it's so important to work with a professional that knows, that gets it. The tax code is complex. It's massive. It's a lot of moving parts. And it's one of those things where you can't just read this part of it and say, oh, okay, well, I'm going to run with that. Because there's breadcrumbs, there's other parts to it that you have to take into consideration. And a lot of times that's what makes it confusing. So it's always helpful to work with someone, an enrolled agent like myself, who's laser focused on tax strategy, that knows the tax laws or at least knows where to go to look in the tax law to make sure that we're applying it properly to your situation.
Yeah, you dropped some gems here. There's three things I want to query you about.
Okay.
So the first thing you said is other people's money and making your business more attractive in
Yeah.
the marketplace. for other people to help you in terms of funding. Of course, I've worked with business entities where it's not about funding. They just want to see if you have your business structured properly before they'll even take you on as a client, right? I think a lot of people miss out on that. Like, is okay, what about the clients that you miss out on working with because you're not set up properly? If you don't mind, speak to that. I mean, once again, how someone in your profession, because I know this is going to perk people's ears up, the nature of the work that you do, how does it make them more investable, fundable? How does it create opportunities for themselves they may have overlooked?
Yeah, I actually, that's a great question. And actually, when you're looking at a business and you're looking at lending or getting funding from other entities, the first thing they're going to want it ask for is your financials. And your financials consist of your tax return and your three financial statements that's going to come from your accounting system, like a QuickBooks, Wave, Zero, anything like that, right? Your profit and loss statement, your balance
Mhm.
sheet, and your statement of cash flows, right? And so if you're not using an accounting system and you can't, at the push of a button, produce those three critical financial statements, then you're already behind the eight ball. And when they ask for your tax return and your financials, and they look at your financials and your financials don't match your tax return because you did the tax return off of just some numbers you might have thrown together and then went back later once you found out you needed funding to get caught up, go back 2 years, 3 years to get your financials caught up, and those numbers are mismatched, you setting yourself up for failure, right?
Mhm.
Again, that goes back to you being proactive and not reactive, right? Lenders don't want to see your spreadsheet. I can't tell you how many times I hear people say, oh, well, I use a spreadsheet. Can I just use my spreadsheet? I can create a profit and loss. Well, yeah, you can create a profit and loss, but can you create a corresponding balance sheet?
Mhm.
Probably not, you know?
Mhm.
And so that's why it's important to use that accounting system. And when you're not set up properly, and those lenders and those funders, whether it's hard money lenders or whether it's investors that are looking to, sow into your business, once they see these reports all the time. They know what they're looking for. They're looking to run some ratios on your numbers. And if your numbers don't make sense, that's going to stand out like a sore thumb right from the beginning. And then that's going
So,
to make that answer be no or not yet, like you need a little bit more work.
so you mentioned something, the three financial statements, right?
Yeah.
And for the uninitiated, and quite frankly, I mean, I've sat down with business owners. I mean, earning millions of dollars in revenues. And when I mention those statements, they look at me like deer in headlights. Break that down. What are those three documents and what do they actually mean? What do they speak to?
Yeah, and I talk a lot about that in this book that I wrote, Bookkeeping for Business Owners, Gaining Clarity and Confidence Without the Overwhelm. This book is written not just for DIYers, but even if you've already delegated that function and you have a bookkeeper, um, and they're handling it for you as a business owner, you still need to know your numbers, right? And so I break down simply what those three statements are and how you can use those to optimize your business. But the profit and loss statement is going to show your income and expenses,
Mhm.
income and expenses, and your net profit or net loss. What came in and what did you spend the money on throughout the year? It's going to give you a date range. You can run it for a month, for a quarter, or for a whole year. That's your P&L or your income statement. Sometimes those words are used interchangeably. And then
Mhm.
you have your balance sheet. Your balance sheet is kind of like your business report card, and it's going to show how the health of your business at a particular date and time. So it's run off of a single date, like at the end of the quarter or at the end of the year. On that balance sheet, it's going to show your assets, your liabilities, and your owner's equity. And your assets and your liabilities have to balance and equal your owner's equity. That's why it's called a balance sheet, because it has to balance. Those numbers have to tie out. right? Your assets, what you have in the bank, if you have any equipment, if you have any outstanding accounts receivables, if you've invoiced some of your clients and money is owed to you, that's going to show up on your balance sheet. That's an asset. You earned that money, it's due to you. That's an asset. In your liability section, it's going to show any credit cards that you have, any loans, if you have SBA loans, or if you have any other long-term loans, if you have any, if you have if you're a real estate investor and you have a building, that building is going to show up as an asset. But if there's an outstanding um, a loan on it, that loan is going to show up as a liability. So you got to make sure. That's the importance of keeping track of your balance sheet. Even if you're, a service-based business and you have computers or printers or things like that, those are assets that should show up on your balance sheet. And if you have payments on those will show up in your liabilities. And then your owner's equity. What kind of skin do you have in the game? What have you infused into the business? And that's again why funders and lenders and things like that, they want to look at these statements and see the money trail. They need to see the breadcrumbs, right? And then that third statement, that third financial statement is your cash flow statement or statement of cash flows. It's going to show your ins and outs. If you're a cyclical business like me, I'm an accountant. So even if I do have year-round revenue coming in, tax time is going to show a spike on my cash flow statement. If you're a landscaper and you do grass, you may have some consistent income because you might throw a shovel on the front of your truck and push some snow in the wintertime. But 9 times out of 10, the summer months, it's going to peak up where you're doing landscaping, cutting grass, and, some of the other things that you can do. But that cash flow statement is going to show when that money is coming in, and it's going to help you make those strategic financial decisions to say, is this a good time to invest in more equipment or to invest in another property? What has been the flow of my money? And so all of these three financial statements, they serve a very important and strategic standpoint of your business for you to look at to see where your money is coming in, where it's going out, what income, what assets, what all of those things. And so that's what those three financial statements mean.
Yeah, I'm listening to you. I'm thinking about a business owner that I've been working with recently, and it scared the death out of me. He owns a restaurant. And when I asked him, could he tell me the cost of the napkins on the table or the cost of the salsa? And could he tell me where the majority of his expenditures were going? He had no idea. He was like, man, the money comes in, I buy what I need to buy. I'm like, bro, if you're not looking at these statements, you could be earning revenues, but still be in the red and not even realize it, right?
Yeah.
And it also gives you kind of a litmus test, like you said before, to understand when you should and when you should not invest, right?
Absolutely.
Just because you're seeing that capital on that business DDA account, that does not mean that's your money, right?
Absolutely.
So yeah, I thank you for that clarification because I know a lot of people could benefit from that. We could do a 2-hour conversation on that alone, man. Because horror stories. Okay, so
Yeah. Yeah.
let's talk about what a new business owner should do in terms of strategies or frameworks to get things off to a correct start. But also look, and I've dealt with this too periodically in my entrepreneur journey. What happens when you have not been paying quarterly taxes or taxes for a year or two? Like, how do you begin the process of righting the ship and getting compliant again so you don't get your teeth kicked in 5, 10, 15, 20 years from now? What are the steps that business owners should do if you're a startup? But like I said, I'm thinking of another business owner that I know. I mean, I've known this person for 20 plus years. And sometimes file, sometimes they don't, right? But I know the individual wants to get their ish together, right? But don't know where to start.
Yeah.
What would be your response?
Well, the first thing you have to do is get in compliance. You
Mm-hmm.
got to get in compliance. And what I mean by that is get caught up on any tax returns that you have not filed. previously.
Hmm.
Get caught
Is
up.
there an order? Like, should you start with the most recent or start with,
I would start with the oldest one first and
okay,
move forward.
okay.
That's what I would do. Unless they have a compelling reason why they need to start in a different order. There's always an exception to the rule, but for best practices, I always say start with the earliest one that need to be filed.
It's an obvious question. I know the answer to that, but I still want to hear you say it. Why?
Yeah, because you just want to make sure that you're keeping things in order, right? If you need to know if there's a refund or a balance due. You need to know, or even if you get to the point where you need to file with tax resolution support, right? And you need to file for a first time penalty abatement, or you need to file for offering compromise. You need to settle your tax debt for less than what you owe it. They're not going to hear from you until all of your previous year tax returns are filed
Mm,
first.
okay. All right.
You
Um,
can't do nothing until you're in compliance. They're not going to negotiate with you. They don't want to hear from you. File those other returns first.
okay. All right. I love it. Um,
Yep.
what strategies, like I'm talking about day to day, you're in the dirt, right? What tools or what strategies would you recommend that entrepreneurs take advantage of, or approaches to how they manage their funding to
Yeah,
be
you definitely
compliant?
Yeah, you definitely got to start with the bookkeeping piece. You got to get a bookkeeping system in place.
Okay.
It's a no-brainer.
So,
It's not optional.
right. So, I
Mm.
mean, there are a lot of tools that are out there, right? There's a million
Yep.
of them.
Yep.
QuickBooks is probably the one I think everybody recognizes and knows. I love QuickBooks
Yep.
because I use technology. I'm not trying to understand it. And
Mhm.
I've personally not given a shout out to them because they're not paying me. But
Right.
but at least not yet. But that's typically that's what I use. That's what I've used and I've needed to right the ship. That's what I recommend other entrepreneurs to use. And that way I don't even have to think about a lot of the frameworks or try to balance stuff on a weekly basis from a legal packs. I know a lot of people are doing that on a monthly basis. Um, what other habits or tools would you recommend?
Yeah, so QuickBooks is dominating the market, but there are others. And in
Mm-hmm.
in this book, one of the resources that I offer is like not a checklist, but a spreadsheet of all of various ones that are out in the market with the pros and cons of why you might want to use this one or that one. Depending on, a person's technology level, they might want to go with something else. But one of the other things, and this is another part of one of my signature frameworks that I teach entrepreneurs, and this helps you manage your cash flow a lot better, is that every dollar needs a destination, right? Remember,
Mm-hmm.
I talked about earlier, you can't spend every dollar that you make. Every dollar needs a destination. So I came up with this framework called POTS. POTS, POTS. The P represents paying yourself, whether you're a single member LLC or if you have a team and you have staff, you running payroll, paying yourself, you and your team. O for operating expenses. T for taxes. And S for savings. You got to say, you can't spend everything you
Okay,
earn.
so let's say it again. So personal,
Paying yourself,
paying yourself, operations,
operating expenses,
taxes, savings.
taxes,
And
savings.
saving.
So what I'm hearing is it'd be a smart ideal for individuals literally to set up 4 different accounts.
Yes. And set up an automated system where a certain percentage of every dollar that you deposit in your account goes to these accounts. And as long as it adds up to 40%, I mean 100%, you're good. But I always use, for illustration purposes, 40% in payroll, 30% operating expenses, 20% for taxes, and 10% for savings. 40, 30, 20, 10. That's 100. So every time you deposit $100, $40 goes in your payroll account, $30 into your operating account, $20 into your tax account, and $10 into your savings. There are systems that you can use that will automate this process. I use an online banking solution called Novo, Novo.
Mm-hmm.
Novo will allow you to set up what they call reserves. So on your Stripe account, on your PayPal account, or your Square account, whatever merchant processing system you're using, you will set your online your Novo online banking account up, set your reserve. So as soon as that money hits your account, it splits it into these percentages, right? So when you get ready to go buy supplies or buy gas or buy whatever it is you need for the business, you're going straight to that operating account. Because like I said earlier, I know and realize that a lot of people operate their businesses off of their bank statements. So they look, like you said earlier, they look in their account and like the money is there, it's available. Well, no, that money is for your taxes, or that money is so you can make payroll, or that money is for you to put, a little something aside. So when you hit hard times, and you will, everybody does. It's fact of life, right? You got a little something to pull from. But setting up a online system like Novo, and that money hits that account, and then you disperse it to your regular local bank account, whether you're banking with Chase or Comerica or Bank of America, PNC, you disperse those monies to your respective accounts. And that helps you manage your cash flow better. So that's another thing I would recommend to an early stage entrepreneur.
So you said disperse. So I have a mental picture in my head.
Yes.
So I have an account, let's say Novo.
Yep.
Great minds think alike. I use them too.
Okay.
Um, so money hits that account,
Yep.
certain percentage taxes, certain percentage operations,
Yep.
certain percentage what you're going to pay yourself, certain percentage savings.
Yep.
But then you're talking about have another account that monies are dispersed
Yep.
to pay those operating expenses.
Correct.
Okay, I just want to make sure people heard that. Okay.
Yeah, yeah, yeah. And you can pay it from Novo if you like, but the way that I personally operate mine is my whatever is in that payroll account or pay myself account, I disperse that to my personal checking account, because that's me
Mm-hmm.
paying myself, right?
Mm-hmm.
Whatever is in that operating account is going to my main primary checking account that I run all my bills or pay all my bills through, or that my debit card is attached to buy things for the business. And then
Mm-hmm.
that savings, it maybe can stay in Novo, or maybe it's in another account where out of sight, out of mind type of thing. And then the
Mm-hmm.
taxes is in a certain account that when it's time to pay your quarterly estimated taxes, you're going to take mm, about 15% and pay to federal and 5% to the state here in Michigan. If you have state tax, depending on whatever your rate is for your state tax, you're going to send that. If you're not in a state where you have state tax obligation, then you don't have that to worry about. Send it to the federal government and you're good.
I love this approach because I don't like to think about it.
Yep, yep.
I just want it done automatically. If I think about it with the million other decisions I have to make on a day-to-day basis, it's not going to happen. And then that's where the mess transpires. I know that's what's gotten me in trouble in the past when things are not automated.
Yeah.
Plus, it helps to streamline your like with your stress level, because
Absolutely.
you have a system in place that you've already implemented. So you're not like, oh shoot, that's coming up. Now I got to deal with this. It's just automatically, in the works. So you just know it's like one thing you can just check off your list.
Absolutely. And the third thing I would say is to set aside, whether it's per week or per month, set aside a professional development day to work on your business and not in your business. And so you have these things on autopilot. Yeah, they're working, but you still got to look in on them from time to time. And so whether that's weekly, whether it's bi-weekly, or whether it's monthly, when you sit down to look at your accounting system, you can look at your bank accounts, you can move some money around, you can do those things like that. But as much as possible, if you systematize or automate your processes, it takes that stress away, because we got enough stress that we're dealing with in life, in entrepreneurship, and all of those things. And stress is a killer. And we can't let this stuff take us up out of here. We have to take control and manage our lives and our finances well. And there's processes and best practices and systems that we can put in place to take some of that stress off.
So for the serial entrepreneurs, right?
Yeah.
Sat down with an entrepreneur today. She earns money. I shouldn't have said that because she's watching this, talking about her. Anyway, so let's just say I sit down with entrepreneurs. I'm gonna think of another individual. Has a business, LLC, where she's doing nails.
Okay.
Has another business, DBA, doing marketing. Right, the money's going straight from her clients into that personal account. I mean, that's how people are getting down, right? And then she is also attempting to launch a career as a real estate agent. So we got 3 buckets going on, right? Her nails, the hair, the real estate. For someone that is in that situation as a serial entrepreneur, I know you can't be exact because no situation is the same, right? But as a generally speaking, what would you say to that person in terms of organizing their finances, even maybe in terms of how they're structurally set up, right? Whether it be LLC, SC, Corp, whatever. What would be your general advice?
No commingling. No commingling. A lot of times we think of commingling as our personal and our business finances, but that means for serial entrepreneurs too. If you have 3 different businesses that have 3 different, I'm about to throw another curveball in there. If you have 3 different businesses with 3 different NAICS codes, you need 3 different accounting systems and 3 different funnels that we just talked about, 3 different sets of pots. You need to separate it because if you throw it all in one pot, it's going to confuse even you. And it's definitely going to confuse anybody that you onboard to try to help you sort it all out. The first thing I'm going to tell somebody is we got to separate this. Because again, if you're trying to get funding, if you go to a funder, if you go to a bank, if you go to a CDFI, if you go to any of these people looking for funding and they ask for your financials and you tell them, they're going to want to know what what do you do? You can tell them, yeah, I do nails, yeah, I do marketing, and I do real estate. Well, which one of these businesses do you want the funding for? And they're going to want to see the finances for that building. When I say NAICS code, that is the code that goes on your tax return that determines what your principal industry classification is. Sometimes there could be overlap depending on what you're doing, right? I'm a tax professional. I help people with their finances. I also wrote a book about bookkeeping for business owners. This is still in a financial lane. So I don't have to start a whole new accounting system just for the book. The book is a subset. It's talking about finances so that I can roll that up. It falls in the same NAICS code. But if I'm doing nails and marketing and real estate, those are 3 different distinct industries and lanes, and they need to be separated. So you can't commingle the finances for those. And what we just talked about with regard to having an accounting system for it, setting up your pots, and doing your finances monthly, that applies to each one of those 3 businesses.
So let's say I'm thinking of a client I worked with years ago. He had a trucking company. The trucking company was generating revenues. He also was dabbling in real estate. So didn't work out too well, but he was buying real estate, kind of have rental property, also trying to fix and flip, right? And then he and his wife together had not a logistics company helping other people with their logistics. Now, the other companies weren't generating revenue. So you know what was going on? They were taking the monies from the trucking company and they were funding the other 2 companies until they believed those companies would become profitable. how does a business owner deal with that? Because that happens a lot. People will start up 2 and 3 businesses. One of them is generating revenues. The other two are piddling along, and they want to take money from the business that's actually generating revenues and send it to the other companies to do what they need to do. How does a business owner unravel or deal with that type of situation?
There's a way to do that. And you're going to have on your balance sheet, you're going to have owner's equity and
Mm-hmm.
owner's draw. So
Mm-hmm.
what an owner is putting into the business and what an owner is taking out of the business. And there needs to be the breadcrumbs, like I mentioned earlier. So from the business that's profitable, where you can take money out as the owner, you do an owner's draw, and then you, as the owner, you can make a owner's contribution to the other business.
Now, once again, because we're kind of getting in the weeds, I don't want to go too far in it,
Mm-hmm.
but for people who are dealing with this, a lot of business owners, I'll be frank, in our community, this is important because most of the entrepreneurs I know, they have two and three things going on.
Yeah.
So if you're doing a owner's draw, I know the question is going to come behind it. What's the difference between an owner's draw versus paying yourself an income?
That's just you taking out money from the business that you put in. If you put money in, you can take money out. And depending upon your entity structure, that's going to play a huge part in this too. So if you're a
Mm-hmm.
single member LLC, that it is just what it is you taking money out. That's going to show up as you took the money out, right? And you're going to have
Mm-hmm.
to pay taxes on it. But if you also have another business and you're contributing to that business or investing in that business, then it's going to come out in the wash, because at the end of the day, no matter what these entity structures are, one could be a single member LLC, one could be an S corp that's going to generate a K1, one could be a partnership that's going to generate a K1. Those K1s and that single member LLC is all going to ultimately flow to your personal tax return, and it's all going to come out in the rents. So don't get to overthinking and saying, oh, well, I'm gonna have to pay. But if you're working with someone that can help navigate this and walk you through this, then you'll have a little bit more comfort and understanding, because clarity brings confidence.
Yep.
So when you're clear about it, and if it's something that you don't know, instead of just doing it willy-nilly or any old kind of way, bring somebody on your team that knows this stuff, that can help you structure it properly. But you got to have that money flow right. Owners draw, contributions, and the owners draw, it might be a taxable event, but depending upon what your basis is in a corporation or a partnership, it may not be. It just depends. There's no
So,
one
so,
size fits all.
so someone could do an owner's draw from company A. They could use that money and fund it to another company, but they got to track it properly
Correct.
because that becomes the basis.
Yep.
And then they put $1,000 in one company. If they track it properly, they take the $1,000 out. They may not be taxed on that because they contributed that. But if you
Correct.
don't do that, it can all become, or all of it can trigger a taxable event.
Possibly.
Yeah. Um, like I said, I deal with a lot of business owners. Even I have had to learn how to navigate that. Right. So I'm loving this part. Okay. So what are some common deductions, common expenses that entrepreneurs just drop the ball? That, because once again, they're not organized. They don't have their affairs in order. So they may have a home base business. They may be spending money acquiring vehicles. They may be spending. I remember years ago, there was a lot of misinformation about whether or not you can deduct clothing and stuff like that, right? What are some of the deductions or incentives that, generally speaking, entrepreneurs just completely miss out on because they're not having conversations with entrepreneurs or business owners like yourself?
Well, I I can't necessarily say that I see common across industries, but I will tell you one of the primary things that's common in the real estate industry is
Mm-hmm.
appreciation of the property that you're purchasing. I've
Mm-hmm.
worked with real estate investors that had no idea that you're required to depreciate those buildings. You're
Mm-hmm.
required to. And if you don't take the depreciation deduction on the return when it's when you're due to it, when you sell it, they're going to add it back. They're going to recapture that depreciation anyway. So you might as well take the benefit of the deduction. There is a way that you can get caught up on it if you've missed it. And I've done that for a client before where they missed like the past 2 or 3 years of depreciating some rental property that they purchased, and their tax professionals hadn't included that. And then they were able to do the 3115 and do catch up on that depreciation, because at the end of the day, when you sell it, they're going to assume that the depreciation was taken over the useful life during the time that you held it. And you're going to have to add that back to your purchase price, right? So that's one that's very common in the real estate industry that I see people miss out on all the time.
I like it. Um, so I'm gonna just throw some stuff that you hear about online. So I'm online listening to this stuff all the time, right?
Yeah.
Okay. So there's three things that I hear that I want to clear up that comes up most frequently in the conversations I have with people. Can you write off a vehicle?
It depends.
Let's talk about it. Tell me more.
Let's talk about it. So, business expenses are deductible, personal expenses are not.
Mm-hmm.
There is no such thing, I'm saying it, there is no such thing as expensing your life. We are
You already
personal,
know where I'm going. That's exactly where I'm
we
going.
are personal people. We have to live, we eat, we grocery shop, we do all the things. Play around with them if you want to. Okay. There's
Mm-hmm.
no such thing as expensing your life.
Mm-hmm.
Okay. Personal expenses are not deductible. Business expenses are. So if you have a business where it's ordinary and necessary for you to use a vehicle, and you do, then the business portion of use of that vehicle is deductible. You can't just say, because I put it in the business name, I'm going to take it as a business write-off. Put it in your business name and you can write it off. Well, did you go pick up your kids from school in this vehicle? Did you go to the grocery store in this vehicle? Did you go to church in this vehicle?
Mm-hmm.
If you use the business, and is this the only vehicle you have? A
Mm-hmm.
lot of times it is. They have this one vehicle. You can wrap it all you want. You can put a sticker on it all you want. If you're going to the grocery store in it, that's not deductible.
Mm-hmm.
So you have to allocate it. You are required, if you're taking a vehicle deduction, you are required, not you should, you are required to keep a mileage log.
Mm-hmm.
That mileage log is going to show your total miles that you drove for the year, how many were personal and how many were business.
Mm-hmm.
And then you have two options. You can either take the mileage deduction or you can take actual expense deduction. But you
Mm-hmm.
can't do both. You can't take the mileage and write off, your gas and your tires and all of the things. It's one or the other. There's no double dipping. There's no overlapping. You get to do either or. But you need that mileage log so you can determine what percentage use you use that vehicle for a business. And if you
Mm-hmm.
used it for 50% or more for business, then you can take the deduction. And that's off of whether it's the purchase price, whether it's the lease payment, whether it's tires, repairs, or whatever. But your tax professional will be able to take all of that information that you provided to them and make a determination whether or not the mileage deduction or the actual expense deduction is a better benefit for you. And whichever one turns out to be the better benefit, then that's what's going to show up on your tax return.
Okay. Clothing.
Same thing. It needs to be ordinary and necessary. Ordinary and necessary. So I'm a business professional. I'm a businesswoman. Unless my clothes are branded, got my logo on it, my business suits are not deductible. I don't care if I bought it to go to a business meeting. If I can wear it in the ordinary course of my day-to-day life, it's not deductible.
I'm taking an airplane flight to California for a business meeting.
You better document it and make sure you have your document. And now if you're going to California, and it has to be that, what was your intent? What was was your intent to go there for a business meeting, and then you're
I'm
going to
going there
spend some
for a
personal,
business meeting,
you're
but
going
while
for
I
a
was
business.
there, I met with a friend.
Yeah, that's fine. That's fine. And especially if most of your time was spent on business dealings. But you have to make sure that your intent, that you didn't say, "Oh, I have a friend that lives there and I want to go visit my friend, so I'm gonna make it a business trip and just do business while I'm there." But most of the time I'm there, I'm gonna be spending it with my friend.
Mm-hmm.
Most of your time spent needs to be done on business, and the whole goal and intent of you going there needed to be for business purposes.
I'm taking my sales team to Ponderosa or whatever people do.
It ain't Ponderosa no more.
Danny Dancer, Great Ghost, Great Goose. I'm taking them to, I don't know, some steak shack, whatever, right?
Yeah,
I'm taking my sales team out. I'm buying them lunch.
yeah. You can do that. You can
Mhm.
do that. This whole code section 162A needs to be ordinary and necessary. That's going to apply across the board. It needs to be
Mhm.
ordinary and necessary, right? And if this is your sales team and you're taking them out, that's fine. Drinks, alcoholic beverages are not deductible, so that can never
Mhm.
be included. That needs to be on a separate tab. But as long as it is for the purposes of morale building for your team, that's perfectly fine.
I'm getting ready to take an attorney out to eat tomorrow at Bakersfield to talk business.
Yeah, that's fine. If it's a business meeting, that's fine.
Yeah. Now I got because there's a million of them out there. Last one.
Okay.
I have a credit card that I use strictly for business purposes, and I'm gonna pay the credit card off using my business account.
If those business expenses that you're paying, if those expenses on that credit card were for business, that's fine. Even if it's in your personal name, if it's a business expense, it's a business deduction, no matter what name it's in.
Got it.
So just because something is in your business name doesn't mean it's a business deduction if it wasn't used for business purposes. And just because something is in your personal name doesn't mean that it's not a business deduction if it was used for business purposes.
I
So,
like it. So there are two seasons that I think about all the time. There's a tax filing season. Everybody rushes to hurry up and file their taxes. Then there's a tax planning season. That's my personal belief. There's two seasons, right?
yeah.
What are some best practices that business owners should exercise to make it easier when they approach someone like you during the tax planning season? What should they bring to the table aside from the P&L statement?
Yeah, well, typically the way that my system is set up, I'm going to always sit down and have an initial consultation with the person to kind of see where they're at, because everybody's at a different juncture. Some people have an accounting system in place already, some people don't. If you have an accounting system in place already, I'm going to ask that you add me as an accountant on there so that I can get in and see for myself.
Mm,
Because I just met with somebody last week and she shared with me a P&L statement. She produced a P&L statement that it came from QuickBooks. I know what P&L statements look like that came from QuickBooks. But then when she
Mm-hmm.
invited me as an accountant on her account and I went in there were no reconciliations done. How did she produce this P&L statement with no reconciliations?
It was a mess, is what it was.
Well, yeah, and it
Yeah.
was 9 times out of 10 it's inaccurate. So we got to dig in the weeds. I have another framework that I call financial CPR. That for people that are overwhelmed with accounting systems, they open it up, they see all of these widgets, this dashboard with all these graphs, these numbers. Don't focus on all of that. Focus on three things. When you go into your accounting system, you need to do your categorize your transactions, post your transactions, and reconcile your transactions. That's what I call financial CPR. Categorize, post, and reconcile. And a lot of people, there's a misconception that once they buy the accounting system, they connect their bank accounts and they categorize and post that they're done and they can produce the P&L and they can. But if you didn't reconcile those transactions, it's inaccurate. I guarantee you it's inaccurate.
Yeah, I just had somebody walk me through one of my accounts. She was like, we need to reconcile this. I was like,
Yeah.
and I gotta spend an hour on this. Okay. All right. So couple more
Well, when you
questions.
don't know what you don't know, you just don't know, you know. So now
Yeah.
that when you know better, you do better as far as the reconciliations go, you know.
Absolutely. Absolutely.
So I sat down with a business owner recently that was doing 50,000 in his real estate deal, right? Doing about 50,000 a year. Had an LLC. Um, the same individuals decided to start up a business selling vehicles, like as an auto broker. That business is easily doing $250,000 in revenues, right? So I come across this often. And he said that I have an LLC. And I looked at him and I said, have you talked to an accountant about considering a S or a C Corp instead? I was like, I'm not a tax and accounting professional, but I'm going to plant the seed to disturb you. So you will go have a conversation with someone about this, right? Most business owners, that's what they do. Oh, this is what I see. They'll set up an LLC automatically on everything. Doesn't matter how much they're generating revenues. And then the one that's like, it hurts my heart when I see it. When I see a new business owner starting up, they're not even doing 100K in revenues. They're a solopreneur and then they have a C Corp. And I'm like, what are you doing? Like, that's like, talk to the people who are dealing. Can you speak to that?
Yeah.
Why is this conversation important?
And I see it happening all the time, improper entity structure. But that is dealt with in that tax planning season that you talked
Mm-hmm.
about earlier.
Mm-hmm.
Goes back to the reason why you have to have somebody on your team that understands and knows all of this. A lot of times people they go to TikTok University or YouTube University and they're listening to general information and then they go out and they implement it in their businesses and it doesn't apply to them because they didn't know what they didn't know, right? And
Mm-hmm.
they didn't pick up on the parts that didn't apply to them and they applied this particular entity structure prematurely before they were really ready for it and it's going to hurt them more than it's going to help them. So when it is like you gotta when you start a business like to me, I give grace. I believe in grace. We all need grace.
Mm-hmm.
But for me, when you make up in your mind that you're going to start a business, I was raised to go to school, get good grades, and get a good job. I didn't know entrepreneurship. So when
Mm-hmm.
you know that you don't know something, you have to go and find the person that can help you, give you the advice that you need, not taking general advice because to hurt you in the long run. So when you don't know what you don't know, you have to seek out that support and go find somebody that can help you. When you start a business, you have to count the cost of what it's going to cost you to run an effective, profitable business. That's what we're doing. We're all going into business to make a profit. Nobody goes into business to lose.
Mm-hmm.
And so when you're profitable, and especially once you start making money, you know, we know the saying in Detroit, what up, though? It take money to make money.
Mm-hmm.
That's not cliche.
Mm-hmm.
That's real talk. And so you have to spend money to make sure that you're managing your money well. And you got to bring on people on your team that have a better lens into this stuff than you do, rather than taking general random advice that's going to cost you more in the long run. It's going to cost you more in the long run. It just is.
Man, we could go another hour on that conversation, but I'm not gonna. I'm respectful of your time. We don't have to bring you back.
Okay.
Um, oh man,
I love that.
you just said a
Dropped a
word.
lot of jewels
Oh,
on us. You dropped a
yeah.
lot of jewels
So,
on us. You really
Yeah,
did.
thank
okay. So, because I want to hook people to come back for the next one. So, the question I'm going to pose to you is if you could point out one or two errors in judgment, the ones that you see most frequently that are the most dangerous. Because for me, I've learned through trials and tribulations that if you don't have an accountant, if you don't have an attorney, if you don't have a marketing person, if you don't have an HR person, or somebody that can help you understand the difference between 1099 and W-2, and nowadays, quite frankly, if you don't have an AI person,
you.
let's just be real, sooner or later, you're going to get your teeth knocked out. One of those areas is going to come back, and it's going to be bad news. But let's refocus back on the tax and accounting piece. What are the two biggest errors that you see people make where you're like, look, address this today? Your business practice may be a hot mess, but I just want you to do these two things.
Well, I will tell you, and this is not a shameless plug. The reason why I wrote this stuff is because of what I see happening in practice. And that is making sure that you have your financial CPR and that you have your pot set up. You cannot be running your business from your bank statement. You have to put an accounting system in place and implement your financial CPR on a regular and consistent basis. It doesn't have to be weekly, it could be monthly, it could even be quarterly. But don't wait till the end of the year to do it.
I love it. That pot system is dope. I never thought about it like that in simplistic terms, but that is the easiest way to think about it. I love
Yeah.
it.
And that's going
Um,
to combat that commingling. You got to separate your money into the various pots, and no commingling, because that P for paying yourself is going to take that money out and put that money in your personal account. And you want to buy your Starbucks and your kids for your McDonald's for your kids when you pick them up from school. I'm sick of seeing that kind of stuff on your business bank statement. That's not a business
oh, you
deduction.
just said. I see it all the time. All right, different line of questioning. Um, you're an entrepreneur at the end of the day.
Yeah.
I'm curious to know. I know you listen to the Grow Givers Project all day, every day. That goes without saying, right?
Yeah.
You listen
Yeah.
to it all the time. But
Yep.
what? But if you can think of a book, or author, or even a podcast that feeds your entrepreneurial soul right now, right? Entrepreneurs sitting in front of you, you're talking, you're chatting with them, and they're like, what well are you pulling from? Like, what are you reading right now that's giving you energy, giving you motivation, helping you to go further, farther, and harder? Or if it's a podcast, I know a lot of people don't read. Let's just be real. Maybe it's a podcast you listen to. Help us out. What's like one or two books or one or two podcasts that you listen to get yourself fed?
That's a good question. And it's so many because to be quite honest with you, I'm not a TV person. All I watch is YouTube or,
Mm-hmm.
um, listen to podcasts all the time.
Mm-hmm.
But for me, self-care is the one of the most important things that I do for myself as an entrepreneur.
Mhm. Where are you
So
pulling from? Where are you learning it from then? What books, authors, or podcasts are you listening to?
yeah, so I mean, so to feed my soul and to listen to positive motivation, um,
Hmm.
I listen to a lot. I do listen to the Mel Robbins podcast a lot. I like
Hmm.
the guests that she brings in. There's another podcast, I cannot think of the name of it, Diary of a CEO or
I
something.
know who you're talking about. What is his name? Stephen Bartlett.
I believe so.
Yep.
Yep, I listen to that a lot because he brings on people about health and wellness, but about current events and news and information that we should know about, that we need to know about to live a effective and efficient life. Um, as I lean in personally a lot on my industry publications, right? So as an enrolled agent, I listen to the enrolled agent podcast a lot. There's a podcast first for enrolled agents. So I listen to that a lot in addition to, the Givers Grow podcast. I
Now,
read. Mhm.
now I'm curious. That is that channel informing you about different laws, regulations, et cetera, et cetera, et cetera, or are they sharing like business practices, how to market more effectively? What are you pulling from that?
Yeah, it's general stuff. So it's not necessarily just for enrolled agents. When you talk about when you don't know what you don't know, for somebody that doesn't know accounting stuff, then listening to that enrolled agent podcast, I'm sure they could learn a lot from something like that.
I like it. Okay. All right. Where can people find you? Shameless plug time for the book again. Bring a copy to Wednesday because I'm gonna be checking for that. I gotta get that. I might
Okay.
actually buy a handful of them. There's some I want to. We're gonna talk. Like
Okay.
I am seriously looking at setting a date and a time where I'm gonna do an appreciation type deal for all the clients I've worked with, all my business partners that I worked with, to have this conversation in person.
Okay.
But in the meantime, I'm going to acquire that book, perhaps multiple copies of that book for you. And I'm going to start passing out to people in my circle, like my immediate circle.
Okay.
But give it to us. What's the name of the book? Where can we find it? How can we contact you? What's the best way to reach you?
Yep. So the name of the book is Bookkeeping for Business Owners, Gaining Clarity and Confidence Without the Overwhelm. This book can be found on my website at Tried and True FS, like financial services, triedandtruefs.com. It can also be found on Amazon and also on my website. You can find me. In fact, if you simply Google my name, I'm going to pop up on the first 4 or 5 pages of Google. So
That is a
I'm
that
not
is a
hard to
huge
find.
advantage for you. That is so huge for you. No one else has that spelling of your name. I'm like, man, that's a marketing tool in and of itself. I love it.
Yeah.
Okay. Um, are there any social media platforms people should be aware of that you show like that's your jam?
Yeah, LinkedIn is definitely my number one
Mm-hmm.
platform that I like to share on. I'm also on Facebook and Instagram
I like it.
and
Okay.
YouTube.
I like it.
They
What's the
might find
one?
me on TikTok as well, but I'm not as active.
Yeah. And I'm trying to tell people, man, you better jump on LinkedIn while you can.
Yeah, I love
Yeah.
LinkedIn.
Yeah. Well, I appreciate your time. Thank you for spending, um, and sharing the gems that you have shared. I know a lot of people can get a lot of value out of this. As you know, I have like another 20 questions I could have asked of you.
We could go on.
But
We could keep
yeah,
going.
but I'm just, man, I'm so concerned. I'm so concerned.
Thank
I tell people that they say a rising tide lifts all ships, but that's only if you have your boat in the water. And if it's only if you are positioned and prepared to take advantage of all the opportunities that exist around you. And this is such a huge piece of that, right? I see all this development and growth taking place, and people are not properly positioned. So folks who've been living in this ecosystem, I'm speaking Detroit metropolitan area,
Yeah.
for decades, are not getting access to the opportunities they should, not because they don't have a good product or service, but because they're not positioned properly.
Yeah.
And anything that we can do to beat that misunderstanding, misnomer, ignorance, whatever you want to call it, we got to take aim at it. So I thank you for your time. I know this is going to be like huge.
No, we share that same passion. So I appreciate it. We can, like I said, we can talk about this all day, any day. So I appreciate you, the invitation. I look forward to coming back again to chop it up even some
Yeah.
more.
And I meant what I said. I'm going to set a date within the next 2 to 3 months where I'm just going to do an appreciation type situation, invite everyone in my ecosystem and their mama out and like, look, this is a conversation needs to be had.
Yeah,
So
let's talk about it. Let's collab.
yeah, look forward to it.